Welcome back to the exchange. This morning's data showing mixed signals in the housing market. Starts fell in December for the first time in 4 months by a little bit, dragged down by a drop in new single-family home construction. But building permits, a sign of future construction, rose nearly 2%, beating expectations. Joining us now to discuss is Logan Mohtashami, lead analyst at the Housing Wire. Logan, welcome. Good to have you with us.
It's great to be here.
Were these numbers good or bad?
Well, it's bad in the sense that the apartment boom is over, right? So apartment
But I thought more
multifamily
housing was started.
Yeah, that's done with. Rates are too high, but the single family starts are still going. Bless the builders' hearts. They're pushing rates down below 6%. So we're still continuing the single family permits, and that's good for the U.S. economy because this keeps residential construction employers and people employed in that sector.
But I want to understand, as I was reading the data, I thought both the permits and the starts were still higher for multifamily than for single family. Am I wrong on that?
No, multifamily permits have been falling for some time now. That sector is done with. So hopefully we don't lose too much employment in that area. Now, the single family starts and single family permits are still rising. That's a continuation of what happened last year. Again, the builders are living in a sub 6% mortgage world, so they're able to grow sales. The existing home sales market doesn't have that luxury.
Yeah, no, the existing home sales, there are no ways that really the sellers are inclined to offer mortgage help the way builders are, right?
Yes, the builders sell their homes as a commodity. The existing home sales market is completely different. We are very restrictive. I call it the COVID-19 policy for housing. The existing home sales is the one sector of our economy that's going to the third calendar year of great recession lows in demand. And even though we've seen an increase in demand, let's be honest here, purchase application data is still hovering at very low levels. We got over 157 million people working. So we are working from an extremely low bar. So let's put context in some of the data lines that we see show growth in that weekly data line.
So if existing homeowners are not putting their houses on the market, that keeps prices moving up, I suppose, because there isn't much supply, right?
Yes, that's part of the savagely unhealthy housing market. However, we do have one good piece of news. Even though mortgage rates are roughly 1% higher than what they were last year, we are seeing new listings data grow this year on a year-over-year basis. It's still near record lows. We're not having a silver tsunami or anything like that. But we are seeing more sellers come to the market. That's a positive. More choices are good. Most sellers are buyers, so maybe we can get some more growth in there. People have to live their lives, right? People need a household formation, buy homes, raise families. So it is a positive that we saw started to happen last year, that even though mortgage rates got to 8%, the new listings data didn't take a leg lower. So we're hopeful that the spring inventory data looks a lot better this year than it did last year.